In grade 10s. This is a new year with a lot of extra work that you have to do. You are getting more homework, you've got more difficult subjects, so sometimes it's quite challenging. So when you do the accounting, the first thing that you have to do is you must look at your time management. So don't sit and waste a lot of time because you are writing too slow, or you are spending a lot of time in between doing other things. Go and sit and say, okay, I've got homework for half an hour, I must sit and do this within half an hour. So it's very important that you teach your brain to write quickly so that you will be able to finish a test. Secondly is the concentration. Your first test is an hour, so it means you have to concentrate for an hour. So when you do this task, you must use this as an exercise to prepare yourself for the test, so that you know, I can finish this work in an hour. So you have to train your brain to concentrate with any interruptions for an hour. It's not suddenly going to happen in the exam. You have to practice that. Now, in this first task, you have to explain the different concepts. So I explained the concepts in detail to the grade 8. So I've put the grade 8 video also on the grade 10 board, so that you can also look at the grade 8 one, and I will also put the grade 9 one on so that you can see what I explained to the grade 9s. Okay, so when you do this work, make sure that you understand these concepts. People in grade 12 that don't understand accounting, that have problems, is quite often because the basics in grade 8, 9 and 10 is not correct. So if you ensure that you understand what you're doing in grade 10, you are just going to make your life so much easier in grade 11 and 12. Now, the part that I want to explain to you now is the accounting concept. Okay, there are 6 different ones. They're going to give you a scenario and you will have to say what concept are they talking about. So the first one is the business entity. Okay, that means that you must keep your business separately from your personal bookkeeping. So don't put your private things into the business bank account. Keep it separately. It makes your life so much easier when you have to hand in tax forms, so that they can see this is the books of the business and this is his private money. It will make it easier if you want to borrow money from a bank, that they can see everything in that financial statements that you have to give to the bank before you can borrow is the information of the business. The next one is the historical cost concept. Okay, historical cost means the original price that you paid for the goods. So if I, for instance, bought a building for 400,000, and now after 20 years it's worth $1 million, I will not show it in my books at $1 million. I will still show it at the 400,000, at the historical cost. Say, for instance, we have inventory. I have to show the inventory at cost. So in my financial statements, I must give notes, and in that note I will say that all the entries are done at historical cost. So anybody that looks at your financial statements will realize that this is the price that you originally paid for it. Inventory at cost price, that's what you normally do. If you see at the end of the year that there's certain inventory that was damaged, and you will have to sell it at a lower price than cost, that means that we're actually going to lose money because we're going to sell it lower. Then I will show in my financial statements net realizable value. But I will also have to write a note to say that the inventory is not shown at cost, the inventory is shown at the net realizable value. Okay, going concern is very important. So when you do the financial statements, you have to indicate that this is a going concern, this business is going to go on in the future. So if you want to borrow money from a bank, they will go and look and see, is this business going on? Then perhaps they will give you the loan. If they know that you're not going on with the business, they're not going to give you a loan because then they're not sure they can get your money. The same with the creditors. If the creditors look at your books and they see this is a going concern, they've got that a security that you will pay them in the next financial year. If it's not a going concern, they're not going to give you credit. Okay, the next concept is the matching. Okay, so I have income in my income statement and I have expenses. Now what I have to do is I must match the expenses that I paid in a specific year to be able to create that income. So it means the expenses for that specific year must be in the same income statement as the income that I generate in that specific year. So say for instance, we didn't get all our income. Some of the money must still be come into the business. Then I will add that additional income because it's still income for the current year, although I'm going to receive it in the next financial year. If I, for instance, received rent income in advance for the next financial year, it's not income for the current year, then I will have to subtract it, so that I will only show the income for this specific 12 months of the financial year. The same with the expenses. If all my expenses were not paid to create that income, I will add the expenses so that I can show the total expense to create that income. If I paid expenses, for instance, insurance for the next year, I will subtract it because it's not part of the expense for the current year. The next principle is the matching. Prudence. Prudence principle. Okay, that means that you must always show your figures in a conservative way. So say for instance, my debtors owe me 80,000 at the end of the year. But now I hear that there's two of them that's going to be insolvent. So I'm going to only receive 70,000 in the future. That means that I'm not going to show 80,000 in my balance sheet. I will go to the conservative figure and say what I think I will get in the future. The inflow of money will be 70,000. So in my balance sheet, I will show the debtors less provision for bad debts. This is something that you're going to do later on in the year. If we, for instance, have inventory, and the inventory cost price was 20,000, and now some of this inventory is damaged, and I know that I'm not going to be able to sell it at cost price, then I'm going to show how much will I get in the future. What will the inflow be in the future? The 19,000. So it means I'm going to show it in my balance sheet as 19,000, and I'm going to say this is the amount that I will get in the future. So I will write off 1,000 rand in my income statement and show that I've lost 1,000 Rand on my inventory. If we, for instance, receive commission for work that we did, and we signed a contract for 10,000, and now the person that we do the work for say, no, we will only be able to pay you 8,000. Then I can't show the 10,000 because that is not what I'm really going to get. I will go for the conservative figure of 8,000. If I can convince them later to give me the full 10,000, then I will show in the next financial statements that 2,000 again. Then it's the concept of materiality. That means you are not allowed to put expense and income together. So for instance, if I have interest income, so I have investment and I receive income, and I also have a mortgage and I pay interest. So I've got an income and expense for interest. I can't go and put this in one account and play them off against each other, because in my income statement I must show what was the total expense for interest to be able to make the profit that we made, and we have to show what was the income that we earned out of our fixed deposit to determine was it worthwhile having this money on a fixed deposit where I actually paid interest expense. The same with, say for instance, we have rent income and rent expense. Okay, so the rent income and the rent expense can't be put in one account and play them off against each other. I want to know what is all the income in the business, and this rent is part of the income. I want to know what is all the expenses to obtain that income, and that rent expense will go with the total expenses. Okay, so that is the 6 concepts. That's very important in grade 10 to 12. So you must know how to analyze a transaction to determine which concept you have to use for that specific criteria that they gave you. Okay, ethical behavior is very important in grade 10, 11 and 12. So it means, if I explain it to you in very easy terms, your parents told you from a small child, you mustn't do this, this is not right, this is wrong. Don't steal, it's wrong. Don't look at other people's work and copy their work, it's wrong. So it means it is something in your whole system that tells you when is something wrong and when is it right. So you have this little guy sitting here on your shoulder, and when you want to do something that's not right, this little guy tells you, you are doing the wrong thing, you shouldn't do this. That is ethical behavior, is when you can identify good and bad from each other. So you know you're not allowed to steal. So that means they can give you different criteria with all the different assets, and you have to say, how should I say this? Is this ethical or is it unethical? So you have to use that little guy on your shoulder to determine whether it's right or wrong. So you must go through the chapter in your textbook as well as the questions in your question book, and ensure that you understand exactly how to answer the different questions on ethical behavior. It doesn't mean you have to go and study it out of your head. You must understand when it's right, when it's wrong, why is it wrong, and you must be able to explain that. I will see you next week again to explain things in the test so that we can prepare for the test. Hope it goes very well with the task. Remember, what you put into the task is going to make your life easier for the test. Good luck.